Aloha, Bruce, and welcome today.
Oh, aloha, Heather. How are you?
I'm a little tired. I'm not going to lie. I've been up since 3:30 a.m. my time. So that song, 20, 24 hours to go, keeps on going through my head. I'm like, how much longer is this day?
36 more hours. Well, I'll trade you if I could get more hours in the day. It seems like my to-do list never gets shorter. But no complaints, no complaints. Got several new folks on the team doing some advising. Hey, it's Savannah, our admin. Hello.
Hello.
Good evening. Good evening. Aloha.
Aloha.
So hopefully you guys have been hitting Savannah for those quizzes that we talked about last week. We'll kind of go through the comments if you didn't hit her up for it, and we'll go through it together and send those out. But today we are in between my dog deciding that she's protecting the mansion. Hopefully she's not too loud on the Zoom. We're going to talk about the FERS Supplement. So that is one of those highly coveted government benefits that unheard of outside the federal government, and something that the reason a lot of people decided that government service was for them.
Heather, it's super hard to hear you over the puppy. It's completely distracting, just so you know.
Oh gosh. Okay. Well, you know what? Hold on one second. Maybe we're okay. So at some point I am going to pass it off to Bruce, but I really want to just go over quickly. What's the FERS Supplement? It is a bridge for federal employees between 57 and 62. So before you start receiving your Social Security and you can retire from government service early, they give you supplemental income to replace your Social Security till you can receive it. So for many people in the federal government who were of the mindset, I'm going to work for one job my entire life, then I'm going to get the old-fashioned benefits that have been promised to me, and that's what attracted so many people to the federal government is the classic benefits package for retirement. And now in this current climate, that is going away. They are talking about putting it on the chopping block. And while they've talked about putting it on the chopping block for years, this is the first time I think they actually might do something, because you know what? There's a lot of things I didn't expect to go away. Like, I don't know, funding for libraries, it seems to be going away. So it's time to start planning for this income gap that a lot of people were relying on. So one of the things before Bruce talks about where to put your money, I'm going to talk about this rule of 72T. So when you have your money in a retirement plan and you retire early, there is a special IRS rule that till either you're 59 and a half or for 5 years, whichever is longer, you can access your retirement money without a penalty. It just has to be a retirement account. And 72T is just an IRS tax code. So hopefully, laws can change. That doesn't go away. So once you start planning for retirement and whatever vehicle you're using, that can be another bridge. So when you start putting your pennies away, because one bridge is going to go away for your retirement planning money, and you got to build that new bridge, you also have to know how can you access that money when it's important to get it without it all evaporating into penalties, which it would if you were taking traditional withdrawals from retirement accounts before you're 59 and a half. So it's for hardships and retiring early, but again, talk to your advisor because it is an IRS rule. But now I'm going to pass it over to Bruce so he can talk about how to safely put those socks in a drawer so they're there when you need them and there are no moth holes in them.
All right. I did want to just mention that, of course, Tavana is here to help coordinate our calendar. And Tavana, could you just maybe briefly mention what it is that you're doing in terms of outreach and coordination?
I am actually working with your schedule to schedule people time to talk to you in case they have any questions or concerns or anything really regarding the retirement and what they can do.
Right. Are you going to be reaching out through Messenger to our group members?
Yes, I am. Mm-hmm. And then also, yep, it depends on through email or whichever they prefer. But yes, mostly through Messenger in the beginning.
Perfect. And then I'm pretty sure that Heather mentioned that there's a quiz and a questionnaire and some other, valuable information that we have to distribute. How do people get that from you?
I could either email it to them, or I think I could be able to put it in Messenger also, but probably email would be better.
Okay. And of course, we need you. If any of this information is looking like something that could be helpful, just got to reach out to Tavana, let her know, right?
Yes, absolutely.
Is there any other announcements for you, administrator?
Not for me today.
Okay. Well, you're welcome to hang out. But if you got to run, I know administration takes a lot of time.
Yes. All right. Well, bye, guys.
Aloha.
Aloha.
Let's see. So I know that basically a lot of people are looking for a way to take like Heather mentioned, put your resources somewhere where you don't have to think twice about them. A lot of people don't want to have the part-time job or inconvenience of trying to figure out what exactly to do with your money, because a lot of times people tell me horror stories about how they thought this or they read that and then they ended up trying something different and it just didn't work. Want to make sure that we can help you avoid any of that and just focus on your passions in life, building your second career or taking the it's taking all your skills and information that you have from your current career and figuring out how to be able to enjoy a comfortable lifestyle without worrying about any of the things that are going on with restructuring. So I believe Heather wanted me to talk about a couple of different options. I want to make sure that everybody is aware of the fact that when you're leaving an employer, and this is going to go for other members of your family as well, anytime that you don't have a copy of, for instance, a life insurance policy, that typically means that you don't actually own the policy. And so a lot of times what will happen is an employer or an organization that you work with, they'll own the policies, and those coverages only get renewed once a year. And typically they don't get renewed after you separate from that employer. So just think about the fact that if you're feeling young and healthy, like maybe you don't need life insurance, it's probably the best time to get the life insurance. And I'll tell you why. Most people look at it as something where, well, I'm just going to pay into this, but never get actual benefits for yourself. And that couldn't be further from the truth once we properly set up what's called an index universal life. So the only thing that most people think about when they hear life insurance is a death benefit being passed on to a loved one. But what's actually available now in today's market is a living benefit. So it's not just a death benefit. I'll give you an example. For every $1 million of life insurance that I have on myself, I know that obviously if something happened to me and I passed away, that money would go to the members of my family and people that I care about the most. But while I'm alive, if I'm to get sick, any kind of a critical, chronic, or terminal illness, all those things that we don't want to believe could happen to us, and unfortunately they do. I just got off the phone with an individual who's just lost their spouse, and their spouse is in their 40s. Never would have expected that person to pass away suddenly, but it doesn't matter whether it's a heart attack or, a stage 4 something. We just can't predict how health goes sometimes, and it's unfortunate. But what if you had access to 90 or even 100% of that death benefit while you're alive? For instance, whether I want to settle all my debt, pay off the mortgage, pay off any of our debt, I'd be able to do that with my existing life insurance while I'm alive, be able to pay all my hospital bills, take care of any surgery costs, be able to pay for any home health care or anything that I might need if I'm no longer able to do all of my daily functions. And that's a part of life insurance. That's the life in the life insurance. It's definitely not all about just a death benefit. But then index universal life, that first word index, what we're able to do now is take a portion of the premium that you pay into the policy and actually have it track an index. Typically, when we're talking about indexes, it's going to be something like the S&P 500. And the reason that we would track that index is because we're not trying to pick a winner or the next NVIDIA or the next Amazon. What we want to do is, if you look at the history of the overall stock market in the United States, just over the last 100 or so years, you're going to see that about 20 to 30%, if we just break it down to decades, about 20 or 30% of the time, there might be a loss or an unimpressive year. And then there's about 20 or 30% of the time where the market grows at double-digit returns. And then the rest of the years are going to be somewhere in the middle. So what we found is that over a period of 10 years, if there's some years that are double-digit returns, the first thing we want to do is eliminate the possibility of losses. So in an index tracked inside of your life insurance, what we're able to do is, in exchange for getting 100% of the gains, for instance, one of the top products that's available on the market, it caps your returns at 15%. So every year that the stock market has a positive year, you can capture up to 15% of that gain. And then any year where there's a loss or any negative in the market, you simply don't have to worry about it. You don't lose a penny. So when you look into this account, it's a cash value account, and it grows along with the index. Because you never have to worry about looking into that account and seeing a lower number than was there yesterday, you know that the only thing that could happen is growth. And every time you make your premium payment, what you're really doing is you're setting aside the money that you may otherwise just put in a bank account or get some nominal return. And you're able to, over the course of a 10-year period, get a lot closer to, a 7, 8, 9, even 10% average, just depending on the decade. And that's going to beat any kind of other safe places to put your money. So what we're able to do with the index is we're able to save that money. And then over the course of 5, 10, 15, 20 years or longer, depending on how young you are when you get the policy, what that does, that money's compounding in there. And you're able to take withdrawals from that chunk of money in the form of a loan. And by taking a loan from your cash value, what you're essentially doing is you're dipping into that money without paying any penalties or fees for early withdrawals like other retirement accounts have attached. So, for instance, I know I just helped someone make their transition from working to retired, and they're still in their mid 50s. So if we would have done that using any of the traditional IRA methods over the last, she's been working on this for 15 years now. But if we would have used any of those other traditional methods, she would have got a 10% fee, a penalty up front for, accessing those funds before 59 and a half. So by taking the policy loans, what we're able to do is access the money whenever you want. And if you do let the money compound for long enough, it will grow to a point where you can safely take those loans out per year. There's zero tax when you take out a loan. And that means that you can create your own income stream tax-free. So that's, maybe what you've heard about online where people are throwing out these, create a tax-free income for your retirement. That's exactly what they're talking about. So life insurance, nowadays, not the old life insurance that you get the mailer that says, for $1, Globe Life is going to give you $100,000 of it is actually accidental coverage. All of those other junk mail type life insurance ads, you can continue to throw those away, because what you really want is you want to solve a couple of things: how to grow your money safely, how to have an additional income stream in retirement that's tax favored, be able to cover your life insurance, be able to replace maybe 10 years of earned income. We could add up all of your debts, your mortgages, and other things to make sure that those are all paid off in the event something happens to you. So protecting your loved ones from an event that we don't want to think about. And at the same time, being able to provide you funds in the event that, your health goes south. There's no reason why you should suffer financially. I don't, for the policies that I have, in relation to the amount of coverage that I've gotten, I mean, the money that I put into it is so much smaller than the overall benefit that I have access to if anything goes wrong. It's disproportionate. It's amazing. So, I sleep a lot better just knowing that those things are all taken care of. So, Heather, did you have anything else that you wanted to address in terms of life insurance or index universal life?
No, it's just one tool in the toolbox, especially if you're younger and you realize that you're going to need a bridge before you get to, 59 and a half. That is one bridge that you can set up for yourself, and your money is protected from the stock market. I mean, I wish it was something that I was educated on when I was younger, to have put some money in that kind of vehicle, and also have the peace of mind knowing that if I ever got sick, I would also have an emergency fund And that's what I love about these new life insurance products, that even the old long-term care is, while it's important, it's not as important as it once was, because you can find some other really more affordable ways to help take care of those costs if they happen, and use that money for retirement if you never need to go into a nursing home or need that kind of help even temporarily. So yeah, I get excited. I'm an insurance nerd too. I love listening to Bruce talk about all the possibilities that are out there for us. So do you have any more nuggets for us today, Bruce?
Well, if you are at all concerned about how to take a larger chunk of money and turn it into an income stream, or even just you're maybe sick of riding the roller coaster of the market and you'd prefer to just only see more in there unless you spend it, and never sign into your account and see that there's less because of something that's out of your control. Today's annuity products are pretty amazing when you're looking at fixed index annuities. So in the event that you run across any of those Fisher Investment or other related advertisements where they're poo-pooing annuities and saying, "Oh, these are the worst things ever," what they're actually talking about are variable annuities, and I agree with them 100%. Variable annuities are not a good place to be, because the term variable means you're on the roller coaster ride up and down. And something that I see a lot of complaints online about is that there are agents out there that are selling these variable annuity products, and they don't explain them well. And they tell people that they're going to get some kind of a bonus for signing up. And it's unfortunate, but the bonuses that they're actually referring to are something called an income-based bonus. Very simply put, every insurance company has internal numbers that they work off of. They all have their own actuaries. So what happens with these income-based bonuses is you've got a set of people at the insurance company that are interpreting numbers and looking for ways to generate interest in their products. And so they come up with ideas like calling things bonuses. But in my experience, if someone's going to get a bonus, they want a tangible bonus that they could put in their pocket or walk away with. And it's not going to be these income-based bonuses. So, I agree with the Fisher Investments that variable annuities are not a great place to be, because there will be restrictions in liquidity and you're still exposed to loss. And, anytime that an agent or someone is talking to you about bonuses, you may want to just thank them for their time and run away. Now, the kinds of annuities that are absolutely the easiest to understand, easiest to use, and the highest value in terms of per dollar, taking a dollar and stretching it as far as a dollar can go, taking a dollar and squeezing it down to the last penny, or maybe even having it return to you more dollars. That's going to be these fixed indexed annuities. The basic idea is the opposite of life insurance. So once you already have your life insurance concerns taken care of, and maybe you've got a chunk of money in your TSP or other IRAs, maybe it's your spouse's Roth or any of these different 403b, any kind of qualified or non-qualified retirement fund. What we can do is we can make it so that in normal numbers, even if you were making a good return on that money, when you start to spend through it, 9 times out of 10, that money's only going to last so long on its own. But if you were to get a guarantee in writing that says that no matter how long you live, this money is going to continue to pay out to you month after month, just like a pension or a Social Security check is a dependable source of income. So are these fixed income annuity or fixed indexed annuities. We can set them up to have a higher payout than you would ever get just from a traditional brokerage account. And even if your account were to hit zero at some point in the future, you get a guarantee in writing that you continue to get your check every month, no matter what. So if you like the idea of growing that money every time the market goes up, but never having to worry about losing a penny, and at the same time having an additional supplemental guaranteed lifetime income, then we should take some time. And I have a software that we could jump into where, I've got about 50 different companies, just about every company that you can think of that offers these type of products. That way you don't have to talk to 7 different people to get 7 different quotes. We can look at the top 2 or 3 products, and I'll show you the entire list. Sometimes there's over 100 different offers on there. We just look at the top few, and then we do an ABC side-by-side comparison and just keep it simple and make sure that you are getting the highest payout possible based on what you have to work with. Heather, are there any other questions that you could think of at the time?
No, you covered that so thoroughly, and you guys need to take some time and start planning. And the best part is Bruce does not charge you for his time. You can get on with him, start your planning process. He's going to show you some amazing products that will help bridge the gap for the coming bridge collapse that we all see, that we're praying. I don't want to get back into our tariffs discussion from last week, but tomorrow I think is like American Independence Day too. I don't know. It's been declared that it's or Liberation Day, and it's when the new tariffs are officially going to start. I don't know. I heard it on the radio when I was driving home. I'm like, oh, really? Wait, is this going to be a federal holiday? Are we going to have time off for this? So, but there's a lot of changes coming to the financial market. So it's kind of time to take a look at what you've got going on and make sure that you're securing it as best as possible where it can grow, but also be shielded from some of the topsy-turviness of what's probably going to happen over the next couple of months.
Absolutely. You said a mouthful there. Well, we'll be
Yeah.
standing by for group members to jump into the calendar. Let's make it fun. Let's make it entertaining, but it's educational. But at the end of the day, let's get you into the best possible situation.
Exactly. Especially as rifts and varies start to happen and you wind up leaving before MRA in 57, then at least after talking to Bruce, you can start that planning now, because the worst day to start planning is when you need that raft. It like, it does no good to fill up your water bottles after the flood happened and all the water has been contaminated. So let's get those water bottles filled, have a plan in place, measure twice, cut once, and then we'll all sleep a little sounder at night, right, Bruce?
I'll tell you, yes. um, that's the one thing that I really enjoy about my job is that by finding people solutions and putting them in a situation that meets or even exceeds their expectation as far as what we can accomplish financially, and having, reading their stories and talking to them and hearing back from them, year after year. And it's a relationship where when I see their number or their name come up on my phone, I smile. I already know. And when I pick up, they're in a good mood because we're not talking about the stress of the market. We're not talking about we can talk about what's in the news and catch up with each other, but I know they're not calling me to ask whether or not they should just hold on and wait because I never put people in situations where they are exposed to risk.
Yeah. And I have some exciting news. Well, two announcements. A, we are looking at a different time to meet because Bruce and I are both extremely busy people, but we still want to continue to help you and your path. So TBA, new time, new day, new time, same bat people, different time and date. And also, I spoke to a veteran today that specializes in veterans benefits. So I'm going to have him come on as a special guest in the next couple of weeks to talk about how to maximize your VA benefits because a lot of you on here are veterans and federal employees, and we need to make sure that all of your ducks are in a row, your federal retirement and all of your VA benefits. So you earn them, they should be going in your pocket, right, Bruce?
Absolutely.
So, but very excited. Keep on tuning in. Watch out for the changes that are coming and watch your DMs for DMs from me and DMs from Tavana. And if you need resources, reach out, including it's in the comments. Just jump on Bruce's calendar. Do it now while you're listening.
Also, when people do that, please include your phone number. That way, if we have any technical difficulties, we can touch base and make sure that you get into the Zoom. Had a lot of people have a little technical difficulty at the end, and having that phone number is definitely helpful.
Yes. Don't worry, no spam calls, but we got to help you. You need to put all the information in. Don't be a secret squirrel. Put all the info in. All right, Bruce. I think we're done for today. We've gone over the half hour. Are we good?
Absolutely.
All right. Night, everyone, or afternoon, no matter where you are, we're here for you.
Aloha.